Hi guys and welcome back to Defi Daily. Today we're going to talk about GMX, that is a derivatives protocol, so it means that it will allow us to work with futures, and it is quite innovative and it is receiving a really high hype. On the other side, what we will discuss together is how does it work, if it is a good opportunity, and most of all I will share with you a chart that could be a warning, or at least something that we should starting to think about, also to understand how the market is moving, because this chart is explaining exactly the kind of humors, the kind of moods that the market is having that can affect in a drastic way also the price of any token. So stay tuned because it's quite interesting. Plus, let me say, guys, that we have just launched our weekly newsletter. You can retrieve it on Substack or just through our link into the description below. Every week we will share about different insights about this industry, so that's quite interesting. Plus, remember that every day on Twitter and Telegram we are sharing the top 10 stories, so you will be always updated just following us on the different channels. And guys, always remember that what we do right now and what we do into this channel is always just educational content. We are not financial advisor. Financial advice is not our job, and that's not what we care. We really want to help you to better understand what is going on into this market, and that's the goal. Plus, guys, if you enjoy this content, always remember to leave us a big thumbs up and drop a comment in comment section below. That's just a small effort for you, but really means a lot to us, and that's something that we really care. So if you would like us to leave a thumbs up, that's something that would be much appreciated. Okay, guys, let's start. Let me move into the smaller screen, and we are ready. So GMX. It is a protocol that has started to work on Binance Smart Chain that has been rebuilt from the scratch, moving into Arbitrum and Avalanche. Right now it is available into these two chains. I want to share immediately the UI, because the UI, it is something that is really brilliant and really great. I love how they are presenting the tool. As you can see, it looks like just being into a centralized exchange, and that's something, at least in my opinion, that's really important, because what we need to achieve is increasing the user experience. So the way that you are using a protocol, the much easier it is, the much probable is that it will be able to gain traction. People are already using futures on centralized exchange and also on TradFi, but they are not using them into the DeFi for the simple reason that too many times it is too difficult to use them. So having a UI that is like this one, so clean, it is something that is quite great. As you can see, clicking on here, the amount of different pairs that are available is still quite small, but it is comprehensive of ETH, Bitcoin, Link, and Uniswap. How does it work? It is offering you two main features. First of all, you can simply swap your tokens, so you can go from any of the supported asset to any other asset that is available into the platform. You can just swap. You will also generate revenues for the protocol. That's something that is so important. On the other side, that is also the main feature, is that you will have the opportunity to long or short any of the supported asset. Plus, you will have the opportunity to use the leverage. The leverage is the main reason why so many people are preferring to use futures instead of using the spot market. The spot market is just means that you are buying for real the Bitcoin, so the underlying asset. Let's say that I want to buy Bitcoin, as I was saying. In that case, in a spot market, you will see into your wallet, into your MetaMask account, for example, your Bitcoin into the wallet. In the moment when we are talking about futures, you will not buy any underlying asset. You will not buy any Bitcoin, but just an asset that is following the price of Bitcoin. And that's just a derivative. So you will not own any Bitcoin, but you are just like betting on the price of that asset. And for this reason, it will allow also you to use leverage. And in this case, on GMX, the maximum leverage that you can use is 30 times the amount that you are using. Obviously, you can long or you can short the asset that you want. Obviously, you will be required to have some kind of collateral. That's not a tutorial, so I will not go through each step, but I want to much more discuss about if GMX could be a good opportunity or not. If you are interested also into tutorial, let me know into the comment section below, and maybe we will find a time also to deliver you some kind of tutorial on how to use the protocol. What is important to you to know is that yes, it is needed some kind of collateral that you can just deposit connecting your wallet. The reason why it's so peculiar, this protocol, is that in the moment when you are like betting, so you are going long or short with leverage, you are using so the funds that you will earn at the end, that are real funds, from which source are coming. And that's the peculiarity, because they are coming from people that are depositing these assets into the protocol. And in order to deposit this asset, what you have to use is another token. Because in the moment when we are talking about GMX, we have two tokens. The GMX token, that is the governance token of the protocol, that we will talk about into a moment. On the other side, we are having the GLP token. That is the token that is representing liquidity that you, as a market maker, are depositing into the protocol. The peculiarity is that it doesn't matter which asset you are depositing, because in exchange you will receive the GLP token that is like an ETF. This ETF is composed by the following assets that you are seeing into my screen. As you can see, Ethereum, for example, it should have a weight of 28%, Bitcoin at 27%, and so on. Plus also USDC that should have a 33%. All you have to do is just going here into this page, buy, sell GLP, and here you will have the opportunity to deposit your assets receiving back the GLP token. The peculiarity is that you can deposit any kind of asset. The only difference is that according to which kind of asset you are depositing, you will have a different amount of fees. Usually, the whole idea is that higher is the fee, higher means that there is a divergence between the actual allocation of that kind of asset against the theoretical allocation that that asset should have into the protocol. If you want to check this kind of divergence, you can use, for example, here into the GLP index composition, you will see that, for example, in this moment after the pump, Ethereum has a weight of 30% compared to a 28%. Bitcoin is having a weight of, in this moment, of 18 compared to the amount that should be 27%. So in this moment, the asset Bitcoin should be the ones that should be much more sponsored, much more cheap to deposit into the protocol. The whole idea is that people that are depositing the GLP token will start earning from the fees collecting from the platform, plus from the losses that are coming from the people that are betting against there. Because the point is like having a peer-to-peer. The infrastructure, the GMX protocol, is not doing anything, just providing the smart contracts in order to give the ability to the people to trade. As we were seeing here, the interface of the trade is just the same that you are seeing into, for example, Binance. The main difference is that in this case, the assets that are behind are the assets are provided by other users that are depositing the GLP. I want to add that the main risk in the moment when you are depositing GLP is that you are exposed to the volatility of any of these assets. So it means that, let's say that Bitcoin goes down by 50%, you are exposed to that risk. So that's something that you should be aware, because in the moment when you will withdraw your assets, you will simply withdraw the assets are composing the GLP. So during all of the time, you will expose to that volatility. Plus, on the other side, the main risk is that not so much people are using the protocol. Because remember guys, if less people are using the protocol, less fee will be generated. So the amount of yield that you will receive just depositing your GLP will be much lower. There could be even a worse scenario where the level of the assets that are depositing, so the price of the assets that are depositing is going down. The people that are using the protocol are decreasing, and the few people that are using it are winning, so are having profits. In that moment, there is the possibility that instead of earning from your GLP, you can encounter a loss. That's something that not many people are talking about, but that's something that you should be aware. Yes, on average, the reality is that people that are using derivatives, people that are using leverage on average are losing. So there are much more people that are losing compared to the people that are earning. But that's something that you should be aware. There is still the possibility to have that kind of scenario. That could be even worse if the whole market is going down, and even worse if the price of GMX is going even that one down. Because remember, for example, if you go to the earn feature, here you can check all the metrics, and remember, these metrics are changing day by day according to the amount of fees that are collected according to the market situation in that exact moment. So everything could be quite volatile. In this moment, for example, GMX, that is the governance token, that if you are staking it, and how you can retrieve GMX. From one side, you can buy it from the market, and for example, here you can find the different protocols that are supporting GMX. You can buy it or simply stake it. Or on the other side, in the moment when you are using GLP, so you are depositing liquidity, you will start earning some GMX. This GMX is coming in the form of this APR. This APR in this moment is equal to 33.59 and is composed, as you can see from the screen, Ethereum, that is a part of 18.47%, plus SQGMX. What does it mean, SQGMX? It is just a token that is not a token that you can sell, but is a token that you can, for example, deposit here, and you will have the opportunity to add another another yield on top of the ones that you are already earning. And this is the amount of APY that you can earn on top. The whole idea is that instead of giving you the ability to sell your rewards, obviously, if you are receiving ETH or Avalanche, yes, you are completely free to sell them. The point is that there is a part of these rewards that are coming in the form of the token of the platform. And these tokens are escrow. So it means that they are having a vesting period, so that it will require some time before having the full liquidity unlocked. And you can check this information into this area here where it's written, please read the vesting details before using the vault. So here you will find all the different details about how to convert your ES-GMX into a real GMX token. In any case, you always have the double opportunity from one side, restake, so compound your earnings through the SQGMX, that is a vault that will give you opportunity to increase your APR, and not to mention it is working something like what we have seen, for example, on Platypus. Do you remember that we had a vested PTP token that were enabling you to increase, to multiply your earnings? The same applies in this case. Here you have a multiplier points that is working exactly in the same way. So using the SQGMX, you will also have the opportunity to increase your multiplier and increase your rewards. So overall, how does it work? It is pretty simple. If you want to just use it as a trader, you can use the interface and you are fine. If you want to use it as a liquidity provider, you will deposit your liquidity, you will receive it your GLP. This GLP will start earning some rewards as you are seeing here. The rewards that you are receiving are divided. Some is coming into the token of the chain that you are using, and some other will come into GMX token But this token will be an escrow token that you can stake here in order to increase your rewards, or you can just follow the vesting period in order to receive your full amount unlocked. Here you have also the opportunity, if you want to just stake GMX, to start stake your GMX in order to receive the rewards. But as I was telling you, there is a big problem. And the big problem is related to the price of GMX. GMX has a fair price that in this moment, or at least this is how it is calculated by the protocol, because they have decided a minimum amount of the price, the minimum price, that in that moment it will trigger some kind of buyback in order to sustain the price. The point is that in this moment, this kind of fair price is something like 70 cents, something like that. I don't remember the exact price, but it should be something like that. So as you can see, actually the price of GMX is much more higher than what it should be. What is even more incredible is that starting from the 15th of June, the price of GMX has gone through an upside of 161%. So it is like 2 times higher than what it was just a couple of weeks before. The point is that, is this big pump related to an increase of adoption of the GMX platform, or are just people that are trying to speculate into the price of GMX? Let's discover it together. In order to understand it, we can use the chart from Token Terminal that is showing us the total revenues. Total revenues are also meaning that higher is this value, higher is also the adoption, the traction that this protocol is able to generate. So if we try to take the 15th of June, we will be here. And as you can see from this point, so everything that is on the right of the line that you are seeing into the chart, it is what happened during this big uptrend. And as you can see, unfortunately, from this point on, we didn't have any kind of increase in revenues. This kind of upside that we had into the price of GMX is not related to a mass adoption of the protocol. It is just related to people that are trying to speculate, just trying to earn more through the price, through the token of GMX. Obviously, it doesn't mean that the price will dump tomorrow. Why? For the simple reason that, as you have seen here, there are many tokens that are escrowed, so that are locked, and that you can't simply sell into the market. It really depends how people are using their tokens, and if there are many tokens that are just liquid tokens that are just waiting for the right moment to be sold, in that moment we will see a correction into the price. What I would like to see is an increasing amount of revenues coming from this protocol. I want to share with you also another metric that is quite interesting, that is this one. This one is the fully diluted evaluation divided by the earnings of the protocol. And as you can see, in the moment when we are talking about GMX, in this moment we are having a ratio of 31.6. If we try to compare this metric to the ones, for example, from DYDX, you will see that DYDX is having a metric that is just 11. So it means that, in theory, the GMX protocol is 3 times more overvaluated compared to what we are seeing into DYDX. I'm talking about DYDX because the concept, even if the dynamics and the way that they are achieving the same result is completely different, but we are still talking about 2 protocols that are working on derivatives and on trading on blockchain. Another story, if we try to compare this number, for example, this multiplier here that is showing us 31 to, for example, Convex Finance, you will see that Convex Finance is much more overevaluated compared to GMX. So as you can see, even in this case, these metrics are literally quite delicate and quite difficult to evaluate. What we can say at this moment for sure is that this kind of big pump was much more due to the hype around the project instead of a real mass adoption that brought more users using the protocol. On the other side, if we try to compare the price of GMX compared to other protocols that are similar, like the YDX, we are seeing that the price looks overvalued. If we try to compare with other protocols generally into the DeFi, we have seen protocols that has been able to pump this ratio much more than what we are seeing on GMX. So that's a demonstration that maybe we could have still space to pump and even go much higher from the point that we are right now. The point is that into the long term, there is no way. The only way to increase the price is increasing the adoption of the token. One thing that can help GMX to acquire more traction could be UMAMI, that is another protocol that should release a new vault that is offering 20% on USDC using from one side GMX, on the other side TracerDAO. I don't want to go into too much detail, but just follow the UMAMI Twitter account, because it is here where you will find all the information. As you can see, they have just announced that they have been audited and the upcoming USDC vault have been certified as a low risk by some kind of entity. So follow it, because it could be the trigger that can push the price even higher. Or maybe it was just buy the rumor and sell the news. So the reason why we had this kind of pump is that because many people were just looking at this news, so they were buying in order to sell in the moment of this feature will be released. Guys, let me know what do you think about it. Generally speaking, I like what GMX is doing. That's a really nice stuff. A basic strategy that you can use in order to defend yourself while you are using GMX could be, for example, using GLP, so the liquidity token, and shorting the assets that are composing that protocol. That's not so different from what will be doing UMAMI. That is just a way to create a pseudo-neutral strategy. So always longing and shorting the same asset in the same amount in order to receive just the APY without any kind of risk related to the volatility of the assets that are composing the underlying basket. So guys, let me know what you think. Pay attention to the price of GMX, because as I was telling, if the revenues are not going up, there is no way that the price can simply go up forever. So pay attention to it. And let me know if you are using GMX at this point, and what do you think about TracerDAO and UMAMI that are integrating GMX. Guys, remember, if you want to stay always updated, remember also to subscribe to our newsletter. You can find the link into the description below. Follow us on Twitter and Telegram for the top 10 stories that we are publishing every day. And obviously subscribe to this channel and leave us a big thumbs up if you enjoy this content. That's just a small action for you, but really means a lot to us. The same if you will leave us a comment. That's something that would be much more appreciated. Thank you guys for following me, and I will see you soon. Bye.